when you review today, make sure you pay attention that we said that we would. Well, actually, let's just do this. Here you go. So the idea here is that the range is contracted. We're at the bottom of the daily range. Yesterday turns into an order block, bearish order block, or bullish order block rather. Risk flows are undecided, and it's Friday, so we're expecting it to be sideways and choppy. If you see, wait, I guess you can't see here, but let me go over to the drawing. Using, oops, daisy. Get rid of that. As you see the premium discount, we're in premium relative to the relative to the range. So we don't want to be shorting up here. We've got these buy side things that we see, but it's Friday, and then there's news at 45. So this is an example of why you don't want to use the 30 opening bell in order to get long. Let me walk you through exactly why. Because remember, you have to find a breaker that displaced after taking liquidity. Well, the only available one on this chart that is in a 1 hour PD array is up here. Is right there. So the thought could have been, well, right at 9:30, as soon as we get above it, we could take it. All right. Well, here's, in my opinion, why that's wrong. There has not been. Yes, this is the liquidity that was taken would have been here, and the breaker's there, but you don't have any displacement. No, shoot. What the heck was I thinking? There was a reason I was thinking why that was not right. Yeah, there's been no displacement. There's been no displacement higher. So we're basically, that's what it was. So we're just going back and forth between buy side here and, I don't know, I guess sell side there. When you look on a little bit lower time frame, 5 minute, this does look right. But and right there at 9:30, you take it. If you say, okay, well, my stop is going to be just below this order block. Well, you get taken out right there. So it's not right. And why? Because there needs to be displacement up here and then a pullback. That's how the model works. So breaker created, liquidity taken, but the pullback can't be shallow. Otherwise, we're going to be looking even deeper. And where do we have anything? Okay, well, this is 5 minutes, so we don't work off that. Work on the 15 minute. I don't see anything. I don't see anything. Maybe that, but I think to me that's a stretch. That's a stretch. I don't see it. So now that we're displacing higher, then we would expect this to run up to almost 45 and then rake down and then run through the high buy side. So I think this is a great example, a great tidbit example of why you must see displacement before you can jump your trades. And then, so we're still thinking about the risk placement, but the risk placement has to be based on the original array itself, and then where the smaller time frame arrays actually exist. So in this particular case, so that's not just jargony bullcrap that doesn't help you. I still think we're thinking this place right here. You take your breaker plus an additional array or fair value gap, whatever it ends up being, and then really that's your risk. So we're going to wait till 45 to see how that plays out, if that long is actually there, or if it's just chopped sideways and there's no opportunity for us at all. So that's that. I'm going to pause this. All right, there was a little less than 1 minute to the 9:45 news. So in this case, where I think I expect reversion, I think I'm okay to take this short up here because we're in premium. It's a reversion Friday. If it happens right at 9:45. Now, if we go down first, I would rather be long from down here. But whatever happens first is what we're going to do. All right, let's go down to the 5 minute. There's 15 minute. You refine that at all? Nope. little bit. Your stop is just the order block right there. So 74. All right. There's our news. What does she do? Take that away. We're looking for that price right there. Okay, because it ran up like that, I'm going to use a little more discretion as to where I get in. Now I'm waiting for a dive. It created a PD array above us. It filled it. So now I'm expecting it to dive. And I don't mind this price right here. But right there is where I'd expect it to turn. But I would expect it to dive through it and then close on it or above it. So we can Okay, see how that's not diving? All right. Well, what we can do, let's just use that. If we close above it, pull back to it, I can use that as an order block, but smaller size. Mm-hmm. Mm-hmm. Okay, look at this low. 803, and that high is 802.75. Missed it by a quarter. Okay, sorry. Pretty crappy entry. That dislocation's good. Now, what I would expect is that this may get up here and fail right here and then dive at 10 o'clock. Why? It's choppy. So we're going to scale one right there. Why? Why would we move that up? Well, time of day, and behavior. Now, if it only bounces off the bottom there, it's going to come diving down straight away. That dislocation was good. There we go. That's good. Now, I don't expect this to go higher from here. I actually expect it to dive bomb at 10 o'clock. See how it's doing that? It's a choppy day. Right there. It's going to dive bomb below this and give me my original entry long. All right, I'm just going to pause till 10 o'clock because it really doesn't matter. I guess I can just speed it up in Camtasia or something like that, but Well, I can't really because it's going to have words. So this it's doing exactly exactly what I expected it to do. Get up there, fail right at that low time frame order block. Why the wicks were the clue to me. There you go. That's okay. And the fact that it's not running away means it's waiting for 10 o'clock. So let's just flick through the time frames. We're still in discount. This order block held. You got clean lows there. Are we going through that? Well, we might. It would mean, but look at what's held and look at where we closed above. So we held it, closed lower, held it, closed higher. So that gives me a bullish indication. Go down to the 5 minutes. Is there any gaps here? There's a fair value gap here, I guess, if you want to call it that, on the 5 minute. But I'm holding for the idea that we're going to dive right into this price. And look at that. Look at on the 5 minute. On the 5 minute. It's correct. Couldn't see it on the 1 minute. That's interesting. Let's go back to that. Why didn't I not see that? 45. Yeah, that's why. That's why. I see. I was waiting for the 1 minute. That's my mistake. So it is what it is. It really is what it is. That was a valid entry at that point. Didn't get to the 1 minute. So now I think it will. And right there. And we'll make that red so we can distinguish. Again, I think it's going to just bounce here for a little bit and then dive at 10 o'clock. Be right back. All right. I have a meeting at 10 o'clock regardless that I'm going to be taking. Let me just double check, make sure I do. Yep, I do. Okay, so now what I want to see, since it's going to dive bomb at 10 o'clock, I'm not taking it just as soon as it touches it. What I want to see is I want to see a little bit of respect, or a very deep penetration, one or the other, a very fast deep penetration, and then I'll take that. But otherwise, I'm expecting it to just like literally flush the toilet. Take these buyers out, these right there. Yeah, it's okay. Go ahead, do that. Yeah, and then here we go. Dive bomb. Now, if it doesn't dive bomb, that would clue me in that we're probably going short, because it should be wanting to take sell side, take people's place to move higher. Little pause. What are you going to do? Get everybody to move their stop. I don't know if that's really what's happening, but. All right, so that took out a little short-term liquidity buy side. Now go take sell side. Got to admit, not loving this, not loving the pause. But let's see what happens. Got 4 minutes for it to do what it's going to do. Yeah, holding up. People are going to move their stops. What would you do? Where's Max Payne here? Take all that out and even that one. Leave that tiny little baby gap right there. But don't go past here. All right, regardless, I'm done. I have to stop this. We'll come back and do analysis later. But the idea is that we were going to dive into here if we show respect, meaning see a dive in here. I wonder if there's a drawing tool. I don't see a drawing tool. Oh, okay. Yeah, so it would be like this. You dive down in here, you take all those stops out, maybe dink that one out, and then you close like right here, and then it would be long. Okay. All right. So we'll pause or stop. All right. Well, I had a 30-minute call, 34-minute call, so I missed all this. It obviously didn't plunge like I expected, which to me gives more indication that there's a bearish bias involved here, or a bearish potential here. So let me go ahead and for me, the day is done. I am no longer interested in anything it's going to do. And I'll explain why in just a moment. It's 10:30. So, well, actually, this would be my time frame to put a final trade on. But look, let's just bottom line this. You get your breaker test right there at 9:49, coming off the 45 news, and it's perfect. It runs up and goes higher. You get in, and it dive bombs on you, and you expected that. There's no problem. So then, what are you looking for? Is the 10 a.m. silver bullet into liquidity. And I was expecting to see a fair value gap here. There isn't one on the 5-minute. There is you see that little imbalance right there that can operate. Oh, that's a 10-minute. Let's go to the 5-minute. No, there isn't one. That can operate like a fair value gap. So let's go down to the 1 minute. And what do you see? Is there any let's go to 10 o'clock. So the process here is you go to 10 o'clock and you look backwards. Is there any fair value gaps there? There aren't any. And then after 10 o'clock, if you see one get created with an array, so you would have a 1 minute breaker with a fair value gap. Let's test down into that. And then boom, right there. And then you would run that up into your order block, or hopefully your buy side if it goes. So repeat that. You understand? 10 o'clock. Okay. And then you see, is there any fair value gaps backwards? No, there isn't. We don't get back to the original PD array. Does any get created on the way up? No, there. And inversion 1 does. And then fair value gaps there. Balanced price range. Look to the left. Is there a breaker? Yes, there is. 1 minute breaker coincident with the fair value gap. So there's your trade. There's your stop out right there. There's your risk, rather. You don't even get in with that. So if that happens, then you're going to have to use this as soon as you get above it. You have to use this PD array right there, and then low risk, or not low risk, low size, and then get in it. But what you would do is break that down right there. You've got 2. Okay, so that's reasonable. And so you don't complicate this. So you don't give it too much weight and think that you're overfitting. Number 1, you have 2 fair value gaps. That's important. And the time of day is important, 10:15. Okay, so usually at 10:15, I expect there to be a swipe down. If it's going to continue, there's going to be a swipe down and then move up. But sometimes it'll swipe down, it'll balance, and then it'll swipe down even deeper at 10:30. But this configuration doesn't look like it's actually going to do that. It kind of looks like it's channeling up. That is irrelevant information. It doesn't really matter. But what is relevant information is this balance profile or balance price range right here. You have gap down and a gap up that takes liquidity. Okay, so then we expect that price range right there to hold price. You also have a and actually take that back. Where is the last breaker that took liquidity on the top side? Right there, it's this one right here. So this is actually the breaker that you're looking for. I would have to decide if it was this one or that one, because that's what forms the short-term high. But let's just say, for sake of matter, that it's that one. Then you have that, the mid of this, and then your stop is just below it. And then if it goes deeper, then you're talking about this and that, and just below. See? Meaning, so that would be your risk profile on that one, if it were the first one. And if it stops you out and you still think the bias is correct, then your stop profile is there on that one. There you go, just like that. So anyways, this is a Friday, and that's a successful trade higher here, another trade higher, and then another trade higher, probably going to run through buy side at lunch. But I think this is another example of a success. Let me back up. I'm pleased to see that the daily range low and high as preparation for premium and discount, the time of day, and then the high time frame PD arrays, namely the hourly, showing where the breakers are, continue to produce the favorable outcomes that I'm looking for. Is it perfect? No. Does it require intuition and discretion? Yes. But in terms of a process, the same behaviors keep repeating, and that's something you can follow.